Hi, my name is Caroline, and today I'm gonna be talking about cash flow. I have chosen East Coast Yacht cash flow from the textbook, chapter 2, to talk about today. And there are a few things I like to start with. I like to describe cash flow. Cash flow, it's in corporate finance, means the actual cash the company makes and uses over a period of time. So like, to simply put it, it's gonna be like money coming out of the business, like minus the money going out of the business. So yeah, cash flow is the amount of cash received and paid by a company, during a period of time. Yeah, so let's continue. That's the description for um, cash flow. So um, I've chosen three questions that I want to be answering about cash flow at East Coast Yacht. So the first one I'm gonna be answering is, how would you describe East Coast Yacht cash flow? Yeah. So I would say East Coast Yacht cash flow um it's mainly supported by earnings before interest and taxes, and that amount is 88,416,000. Um, and this cash flow shows a positive net cash from operation, and I can also say that it is driven by goods sold, and then I would say maybe careful control of cost throughout the period. um, yep, so let's continue. And to add to that, I would say the numbers on the East Coast Yacht statement shows that operating cash flow is very healthy, because for about $65.9 million, yeah, it's pretty good amount of money. However, I also believe that the company needs to balance this with its investments and financial needs, because the company also collects its receivable quickly. I also believe that it will indicate good efficiency compared to um, the other industries, you know. So, yep. Um, let's see. The next continue. Um, I also want to add the last question. Which cash flow statement accurately no, that's the second question rather. Yeah, which cash flow accurately describes the company's cash flow? I would say the cash flow statement of East Coast Yacht gives a clear picture of the company's cash movement, because it separates activities into, I would say, three categories, and I would say operating, investing, and financial sections. Yeah, and the next point is, I think this statement usually made. It's made using the indirect method, from net income, which shows generated um, um, money that was generated in the company and used in the company. So to continue with that, I would say, while other methods like cash flow from assets are helpful for valuation, the standard cash flow statement gives details to, like creditors and shareholders, because, you need to understand the cash flow of the company, like the liquidity, position of the company, and it's also very important too for financial planning, because every year the companies plan for the future. So I mean, it's especially the company, um, its plans to grow more in the next coming year. Yeah, so that'll be it. The third question is Larissa's plans of expansion. Yeah, Larissa's expansion plans are very, very bold, because aiming at 20% growth next year, that's a great one. But they should be considered carefully, because the company has had trouble financing in the past due to maybe like poor planning. Although the current cash flows are strong enough to support, the projects, but still the project needs an upfront of maybe 50, 60 million. Um, yeah, and um, maybe another 26 22.6 million, so I would say, yep. The next one, so let's continue with Larissa's plan of expansion. I think the company has already started raising long-term debt, securing about 40 million of and paying 22.6 million, showing an active but risky financial strategy. Who? So while the expansion is possible, given the company's short-term ability to pay debts, it needs careful control of spending, um, generally, and then debts also, to avoid taking too much risk in the future or the year coming. So with all the questions, I'll put a table here showing the 3 questions that I've answered from East Coast Yacht. The first one is a cash flow description, which is a company that shows a robust operation cash flow. It has also a positive net cash flow from operations, strong sales, and cost management. Yeah, they are in control of their cost management. And the next one was the preferred financial statements. They have a strict categorization, for instance, like operating, investing, and financing. Maybe they accurately portrays the cash movement, and I think that is very good about a company that wants to expand in the future. So talking about plans of expansion, I made a few comments on that. I know that general expansion supports the cash flow, and also you should look at your past financing difficulties, and I think that was noted in East Coast Yacht cash flow. And they need careful long-term debt management. And I think that will be all for today, and thank you very much for listening. Bye.